Good morning and welcome to a very, very special edition of Join the Dots. I hope you saw my short video I put out to make you want to watch this, because this is a sensational video. And you know me, I concentrate on the truth. All right, I don't go for clickbait, don't go for all these false stories to try and lure you in. So straight away, let's watch this video and then I will explain to you what it is.
There's three.
Okay, now you saw that. It was not Harrods on the New Year's Day sale. That happened, and let me get the details, that happened at Martin Place in the CBD, Sydney, Australia, outside a company called ABC Bullion. And it's like that every single day. But it's not in the media. It's not in the news. It's not on the television. It's not in the newspapers. Why? Can you see the link? I'm going to link so many. I'm going to join all these dots constantly so that you can see what we're up against and what we're faced with in terms of truth telling, in terms of covering up the truth, censoring the truth, hiding the truth, when the public should know the truth. So, as I say, it's the same every day. Media, nothing. Now, I remember in 1979, 1980, when I was selling gold at a little provincial branch of National Westminster Bank in Beaconsfield, or Beaconsfield as we used to call it. And there we had the Afghan War, where Russia went into Afghanistan for the first time. And that was the first major international incident, well, since Vietnam, I guess. But it was a European influence. It was Russia, World War III. Here we go, everyone. And that's why people scrambled to buy gold. What you'll read in the textbook is it was inflation, because people can't be bothered to find the truth. Inflation took the price up from very little to 500, but it was the Afghan invasion that took gold to, I think, 850, 900, somewhere around there. Anyway, the point is, you don't get the truth. Even in historical reports, you don't get the truth. So you have to rely on joining the dots that your own eyes show you. They show you. Please watch that video again. Okay, that's the public. Now, it could be that Australia has got a unique edge in that the people have made so much money out of their property inflation that they think they can make more money now with gold. Or it could be those who've missed the property ladder and are trying to get on it by buying gold. I don't know. I haven't interviewed the people. Okay, that was sent to me by a client based in Australia. And that's the beauty of my network, built over 30, 40 years of contacts. Because I will get the truth sent to me. Because these people want the truth out there. So I'm going to link this now to America. And there's an article out, coincidentally, on Market Watch today. Okay, 14th of October. And it shows you that gold's record-breaking rally could keep running thanks to a growing demand from retail investors. Okay? Now this is interesting, because what they actually say in the article is that the public have been net sellers recently. In other words, the public perceive it to be at a level where they'll sell their gold rather than buy it. But of course what we know is that it's not been a bubble. This has been core central bank reset of the financial system buying. This is not people out there buying a few $1,000s here and there and taking the market into a bubble. This is a solid underlying structural change in the whole economic system and financial system of this planet. And that's why we do join the dots. Okay? So they talk about people been selling, and I think, okay, who has been left out of this buying spree in America? Who's really been left out? Well, it's anyone who's served by banks or IFAs, isn't it? Have you heard one IFA suggest buying gold? No, because they're programmed by a textbook and a script and a schedule, and they have to sell product. It's no good buying gold because you just hold it. But if you buy shares, you can churn them. You can sell this one, buy this one, sell this one, buy this one, buy bonds, buy this, buy that. Oh, this is happening. Let's sell this. Let's do that. Let's do that. Let's do that. No, gold you just hold, and it goes up. And since the beginning of this century, since the year 2000, 9% compound growth. In fact, it's more than that now because that was a quote from about 3.5, I think, and now we're 4,200, aren't we? Okay, we're another 20% up. So 9% compound growth, beat the S&P, beat Nasdaq, beat the lot, but you're not hearing about it. And you're not seeing that video. You're not seeing those people queuing for the whole day to buy some gold outside ABC Bullion in Sydney. You're not seeing it. Why? And you're not hearing it either, are you? Now, what's happening though? What's happening now? Ian Hartnett, Bank of America, Mike Wilson, Morgan Stanley, Jamie Dimon at JP Morgan, Warren Buffett, they're all saying some gold. Ian Hartnett, Bank of America, 60-20-20. Now, he is backing it up because then his boys are coming out from the background and saying, we see a gold price of $5,000 in 26. We see a silver price of $65 in 26. I think we'll get there in 25. Just saying. So, Bank of America, 60-20-20. JP Morgan, oh sorry, they were 25-25-25-25, weren't they? That was Ian Hartnett. Morgan Stanley, Mike Wilson, 60-20-20. Sell half your bonds, because that 40-year bond rally has finished. Sell half of all your bonds and buy gold. Wow, how much spare gold is there? That's easy. There's none. Look at the queue. Look at the queue outside ABC Bullion in Sydney. How much gold is there? None. And how much gold will there be when the public in other countries start to learn of what is happening, seeing it, understanding it, and reacting to it? What is going to happen? So I'll link the article from Bank of America. Okay, so you can read that piece. Gold 5,000, silver 65 in 26. I think it'll be 25. Okay, and I'll also link a piece because it is relevant. It's an article on the Fed, and it says the Fed chair opens the door to lower rates and QE. Now, jobs. The Fed are realising that jobs are going. The jobs data is chronic in America. Chronic. The leading indicators, chronic. So they're going to have to move fast. They're going to have to drop rates fast, and they're going to have to print. And what does that mean? Higher gold prices, higher silver. It may mean higher stock prices for a while as well. It may mean. And in my world, I will be taking those prices and reinvesting. Just like Bank of America, just like Morgan Stanley, just like JP Morgan have said. Okay, take it out of one pot, equities, bonds, put it into another pot, gold, silver, miners, precious metals. They're all saying it. Are you doing it? Are you doing it? So we've got the Fed chair. I'll link it so that you can see that that's what's been said. I'll link the Bank of America. But I'm going to leave you one more time with that video. Okay, I'm going to leave you with that video outside ABC Bullion, Martin Place, in the CBD of Sydney, Australia. I'm going to leave you with a video of that queue, and I'm going to ask you, why is it not in the media? But more importantly, what does it tell you about what's truly happening in the gold market? Thank you very much.